we talked earlier about what can we expect today.
Yep.
But it's really, at the moment, what can they afford on Thursday?
Well, obviously, yesterday was panic in the market. That is according to Ding Shuang at Standard Chartered. Today, we're assessing different reports. This S&P report you just mentioned, as well as Citi. And then Thursday, you alluded to, that's when the bond payments are due, $84 million in an offshore dollar bond. And if they don't, and there's 30-day grace period passes, that will be essentially a default. Now, S&P is saying, and this is not a negative assessment necessarily for the contagion story, it's basically saying Evergrande will likely default, which doesn't expect S&P, China's government, to provide any direct support to that developer. They believe only Beijing will intervene if there is far-reaching contagion causing multiple major developers to fail and posing systemic risk to the economy.
Could it be a fudge in the end? That's the thing, though.
Yeah, I mean, what they're seeing is that this, I won't say an isolated case, but this is a case where if it doesn't create the contagion that Beijing is really worried about, it will default. It will essentially then go into debt restructuring or ultimately a failure. What is happening is the smaller developers that are also have these dollar bond stress right now, they mentioned China Central Real Estate, Fantasia, Rise Sun, and Cynic. They've all been downgraded to negative by S&P. Meanwhile, this is the interesting point, too. They're saying the market is still willing to provide capital to large players with solid fundamentals. So it could be isolated, according to S&P. Evergrande might default. It might not be a bad thing for that story of contagion.
Well, today, Evergrande continues to fall. But when you take a look at the broader property index, Steve, some relief there, some stability. You got to wonder what's happening.
Yes. Yeah, I mean, obviously, the Hong Kong developers got hit on multiple fronts yesterday with the market sell-off. There was that panic that Ding Shuang talked about. But there was also the story that came out last Friday and over the weekend that Beijing perhaps is fed up and has run out of patience on policy here in Hong Kong to address the land reform issues, the so-called, as Reuters reported, the monopolistic behavior of the property tycoons here. We saw the big four developers, Sun Honggai, Cheung Kong, New World Development, and Henderson Land all fall by the most in more than a year. I mean, $6.7 billion wiped out of market value, U.S. dollars, not Hong Kong dollars. Bouncing back a little bit today, there has been some more market chatter. The TVB had a story citing the Hong Kong Real Estate Association chairman as saying he is unaware of any meeting between the big property developers and Beijing about those potential regulatory crackdown on the property market here in Hong Kong. So there is a bit of a bounce back right now. But again, the overall overhang on Evergrande still persists. And tomorrow is a market holiday. There'll be some licking of the wounds, and we'll readdress all this on Thursday, debt repayment day.